Hi guys, it's me, Tom Altieri, broker owner of New Jersey Mortgage Services, right here in Toms River, New Jersey. And today I'd like to discuss with you closing costs. So when you close on a purchase loan, there really are two components to closing costs. There's closing costs and then there's prepaid items. Now, closing costs really start with, are there any points associated with the loan? Some lenders charge you upfront fees called points, and normally a point would be a discount point. And for example, if a rate was 4.5% and they charged you 1 point, it may reduce the rate down to 4.25. That could be a cost associated with, with a purchase or even with a refinance. Other costs are, you're always going to have an appraisal fee. Lenders always want an appraisal of a property, and that's part of your closing costs. But it's an upfront fee, and it's paid to an independent third-party appraiser. And those costs generally run anywhere from $350 to $650, depending on if it's an investment property, a multifamily, do we need a rent schedule along with it. But normally on a single family home, we're around $350. That's where these management companies are charging $350 to $400. When you buy a home, you either have a title agent closing you or an attorney. Northern Jersey, mostly from the Jersey Shore north. Everybody uses attorneys, and charge anywhere from $800 to $1,200. It's part of your closing costs. Lenders have certain fees associated. Some lenders have what's called a commitment fee. So at closing, that's how they make up for some of the costs associated with their producing the paperwork and stuff. And they could run anywhere. I've seen them from $500 to $900. When you close on a property, you're going to need what's called a title search and a title insurance policy. What the title policy does is it protects the lender against somebody coming back later on and saying, I never signed off on this deed on this house. I still own this property. And it protects you, for your down payment with owner's title, and then lender's title would protect the lender if anybody came back and tried to take the house back again. A good rule of thumb there is probably about $5 per thousand. As you go higher, it gets a little cheaper. So for example, a $100,000 loan policy would probably be around $500 for the title. But there are additional costs associated with the title that probably run up to about another $400. Depends on email and the other soft costs that the title companies put into there. So I would always say about $5 per thousand. Again, 200,000, maybe $1,000 plus another $400. Generally, you need a survey on a property, especially when you purchase or go home. You want to know, even though some lenders will allow you to close without a survey, or you still want to maybe do a survey to make sure nobody's encroaching on your property. And basically, a survey just delineates the outline of the whole property. And those today cost somewhere around $600 to $800. They can become much more costly depending on property size. So if you have a larger piece of property, they're going to cost more money. You always have what's called recording fees. Your mortgage and your deed have to be recorded with the county. Attorneys usually charge about $500. That got real expensive. The county charges per page, so they charge about $250 for each. So those are your basic closing costs associated with the mortgage. The other component is what's called prepaids. All lenders are going to require you to prepay an insurance policy 1 full year in advance. So if your insurance is $1,000, you're going to need $1,000 to pay for a policy in advance. Lenders charge prepaid interest. Unlike when you pay rent, you pay for the first of the month forward. Lenders want you to pay behind you. So if you close, for example, the 15th of the month, and let's say it's the 15th of September, they would collect 15 days of interest, and then you'd skip October's payment and you'd start paying on November 1st, paying back behind you for October. Most lenders require, especially with less than 20% down, what's called an escrow account. Now, an escrow account in New Jersey, the taxes are paid quarterly. So depending when you close, you'll need at least 1/4 of the taxes in an escrow account, 3 months. Some charge you take even more, depending again what time of the month you're closing. Because if a tax quarter is due, and they generally require you to have 2 to 3 months reserves in there also. Same thing with your insurance. They'll take 3 months of insurance at closing also. They'll take if your policy is $1,000, it'd be $80 a month times 3 months. Take another $240. And an escrow account, all it is really is a bank book with your name on it. It's your money in there. And when you make your mortgage payment every month, a portion of that goes into that account. So again, quarterly when the taxes are due, they're paid, and annually when the insurance is due, it's paid for you. And the lender always wants to have a little buffer in there. So I hope that explains closing costs to you. If you have any questions, I'm always accessible, 800-789-9293. And if you're on one of my websites, you'll see that I have a lot of good information here. I have a video series to help you, become a well-informed home buyer. If you want to be pre-qualified, just click a link. We'll be glad to pre-qualify you. If you want to know what rates are, fill out a little bit of information there, and we'll be glad to give you today's rates. So thanks for stopping by, and have a great day.